Welcome back to another edition of Market Snapshot. We're closing up May, and we hope you all had a fantastic Memorial Day weekend. And as always, Ruben, we're going to dive right in with the hot topics of the month. So what are we talking about today?
Yeah, so we're going to go through three things. We're going to talk about existing home sales, as we always do. We'll get into mortgage rates. And then thirdly, we're going to talk about a lot of things that are just feeding into mortgage rates and driving the market right now.
Tell us, what are the breakdown of the numbers from this last month?
So this last month, we saw sales go down about 2% year over year, and actually month over month as well. Both decline a little bit. We saw inventory come up. So that's some of the good news. We are seeing inventory moving up again. It was about 16% year over year. We're still only at 3.5 months of supply. So that's still, for the most part, nationally in a seller's market.
Right.
Regionally, it's a little bit different.
Sure. And I know we'll talk about mortgage rates in a minute, but you and I were talking about this before this meeting, and we really dug in and we're looking back at 2019 and what it looked like then versus now, because it was really the last time the market was somewhat normal, right? What's similar but yet different about 2019 versus today?
Yeah, I mean, it's kind of interesting because the inventory situation is actually fairly similar. 2019 was a year where we saw tightening inventory. If you remember back to 2020, before the pandemic happened, we were actually talking a lot about the fact that we needed more inventory. We were down in like the threes in terms of month supply already. Right. Sales are about 20% lower now than they were the same month, if you go back to 2019. 20%. A lot of that's related to mortgage rates. Mortgage rates were substantially lower and they were declining. They had actually come up some at the beginning as we went into 2019, and we're starting to decline. So that kind of can show you a little bit of what, if we do see a beginning to a real decline in mortgage rates can do, sales were starting to pick back up because of that.
Yeah. Well, and the other big difference you and I looked at was that there were about 5.3 million home sales then on average versus the 4.1 that we have going on right now. And where is all that demand going? Where did it go?
Yeah, so it's mortgage rates, right? People are staying put because of the affordability issues. And we also saw a lot of movement during the pandemic, right? We saw a ton of home sales happen. We saw a lot of low mortgages.
Yeah, that's of course always the concern. And just before we close up this section, I think it was really important what you were saying. We have that level of home sales going on right now that's really just the people who have to. All the people who are choosing to, for whatever reason, seem to have either done it during the pandemic or they're holding off right now. And that's why you said it best. You said we hit the bottom, but how wide the bottom is the big question mark. And it seems like we're just still in that place right now.
Yeah, that's exactly right. I think next year we'll start to see potentially some improvement, but I think for this year it's going to be much of the same. We're just going to keep kind of moving along. We may see improved mortgage rates in the second half of the year, but there's a lot of questions between now and the end of the year for how that's going to go.
Yes, those entertaining mortgage rates that are really the bane of our existence in real estate right now. So let's talk about that. What's going on with mortgage rates?
So plus side, we have seen them trend back down a little bit. We've seen about a 20 basis point improvement from where they had been. We're about 7.1% now. With some luck, those will keep trending down in the near future. The challenge here is what's happening with monetary policy right now. Inflation numbers have been mixed. For the most part, they've been fairly flat. We haven't seen any big increases, but they're not seeing decreases at the pace that would instill a lot of confidence in the Federal Reserve to lower interest rates. So rates that had been anticipated to get lower, those dates for when those changes are going to happen, have been pushed off a couple times now. Now we're looking at potentially September before the Fed acts if they do.
If they do, right?
If they do.
We had so much hope coming into this year that the Fed was going to make some changes and going to reduce or lower the effective mortgage rates that are occurring because of the bank rates being changed. And that just has not happened yet. And you're saying we're going to have to wait even longer.
Right now, the way things stand, it seems like the Fed's feeling way more cautious than they were at the beginning of the year around lowering rates. Inflation has been a little bit more sticky than they anticipated. Right. So it sounds like, and the other thing is unemployment hasn't really moved much, right? So they're fairly comfortable keeping rates elevated because it hasn't hurt the economy.
That's right.
And until it starts to, they're going to feel okay with waiting.
Yeah. So what you're saying, and I know we've shown charts on this before, unemployment is still at historical lows, which means people are doing pretty well. The one thing that we talked about that is maybe a sign of some changes to come is that our largest buying group, millennials, are spending less money right now than they did last year. They're spending less money on services than they did last year. And some of that may be because they're paying for student loan debt again, which they weren't paying for last year. Or it could be that people really are tightening their belts a little. And any thoughts on that?
We have seen some patterns with consumer spending starting to slow down. It's sort of the initial phases, but we did see GDP slow down in the first quarter. What that does in the second quarter is probably also going to inform the Fed a lot about what they're going to do in the future. Another slow growth report would probably be good for us in a sense, as it would kind of give them a little bit more incentive to consider lowering interest rates.
Sure.
But again, we haven't seen unemployment move very meaningfully. We're at 3.9% right now. It's moved a couple basis points in the last few months. We've kind of been bouncing around 3.7 to 3.9. Until that deteriorates, I think much of the same.
Sure. Yeah, which is sad, right? Because that means we're looking for bad news in order to get our good news. And all those things are great. It's so great that we have low unemployment. It's fantastic that people are starting to curb their spending, which is helping inflation stay the same. But what would be better is if it came down, which means we have to spend less, which means we need people to stop spending so much. And also we need our home prices to stop going up so much, because that's still occurring, right?
Yeah, a big part of inflation right now has been what we call owner equivalent rent. There's been a lot of debate.
Owner equivalent rent.
Yes.
What is that?
Rather than going out and surveying people on what their mortgage payments are, they essentially go and look at what the rent you would pay on a house, on your house essentially, if you were renting it would be. And that's what feeds into the consumer price index.
Yeah.
As we all know, that's not necessarily reflective of people's reality,
right?
Especially with the way mortgage rates and rents have moved in different markets.
Which I know here in Austin, for example, it's a lot less expensive to rent someplace close to downtown than it would be to buy it and take on that mortgage. That's what you're talking about, right?
Yeah.
They're looking for the less expensive, better location oftentimes versus taking on the mortgage itself.
Yeah, or you may have, someone may have locked in a very low mortgage rate in a neighborhood that now commands a very high rent. So the rent could overstate, right, what they're paying to afford that house.
Sure. So they don't want to move.
Yeah. So even though market rents in some places have come down, because such a large portion of renters are just renewing their leases, they're still paying the higher rent than what they would if they were willing to move to a different apartment and pursue a couple $100 or another $100 off their rent.
They're just staying put, which sounds like a lot of people are doing right now. They're staying put in their apartments, they're staying put in their homes because interest rates aren't going anywhere. And you keep telling me, and it makes me sad every time though, Ruben, that this is not gonna happen fast, even when it does, right?
Yeah, that's correct. This is gonna take time to unwind. In the past, it's taken usually multiple years for affordability to come down off of a peak back toward the average.
Which it makes me sad. And of course, it's all done in the betterment of the economy as a whole. But what I hear you saying in summation is, we're kind of at the same place we've been the last few months. We're looking at being in that 4.1 to 4.3 million homes sold. We're not looking to see much better than that. And those mortgage rates that are really keeping things where they are right now, preventing people from making moves unless they have to, that's not changing anytime soon. And even when it does, it's going to be a slow change.
Yeah, I think that's exactly right.
Sad and yet also helpful, because it helps us make better decisions every time we have these kind of conversations and bring that information to light. And speaking of making better decisions, all of the lawsuits, everything going on, we know that our market centers here at Keller Williams are going to be having another conversation about how does this affect real estate on a day-to-day basis? What are the conversations that we need to be having with our clients? And we're going to be doing that in June too. So I'm sure we'll have even more to talk about then.
Yeah, absolutely.
Well, that's another market snapshot for you, and we're excited to have you back every single month. So don't forget to subscribe now and make sure you don't miss a minute of next month.